Hi guys. Good to be here today. It's a new week, and we're going to dive into futures trading. So I'm here with Mark Brand, who's going to take us just through the session around futures. So if you are a trader and you'd love basically just to learn about futures, this session is for you. So if you have any questions, feel free to leave them on chat, and we'll be sure to address that. I'll be your host, Charles, and joining me is Mark. So I'll let Mark introduce himself, and he can take us through what he's prepared for today. Mark.
All right. Thank you so much, Mr. Charles. Good afternoon, morning, and evening to everyone listening to our AMA right now. My name is Mark from Ghana. I'm a seasoned trader. Yes, I am well vested in technical analysis, all aspects of technical analysis to project and predict the financial markets, which crypto happen to be a subset. So today I'm going to take you guys through a live demonstration with some tips. We're going to do a little bit of practical approach to trading futures. We will do open analysis like we did the last time. That was last week, Tuesday. You can drop an asset in the chat room and we will analyze it for you. Whatever we're going to say is definitely not a financial advice, but for educational purpose. You see how to analyze the market, how to control the chart, how to understand price, how to do the nature of price and what market is doing. So that is what we are going into today, and I'm going to share my screen. I'm pretty sure it will be interactive enough. So your feedbacks are very important. Your comments from all social handles are very, very important for us to analyze together. So stay tuned for the next 56 to 90 minutes. I will be your teacher for today, right? All right. So now, before I actually go into the session, I cannot stop I'll have to stop by academy.binance.com, the favorite and the only place recommended to grab some concepts, anything you are looking for relating to information about cryptocurrencies, blockchain technology, Binance, Binance products and services. If there is something you want to understand about crypto in general, one stop shop for you is you should actually go to academy.binance.com. If you're also looking for a certificate programs, okay, university programs are there, free programs are also there. Navigate through there and then make learning fun. We also have the learn to earn as well over there for you. Now, if you are joining and you are from West Africa, East Africa, you need to be in our community, that is Binance West Africa or Binance East Africa. And whichever continent, any aspect of the world you are, there is a community for you. Right. So West Africa, we can communicate directly. Once I'm reading your Telegram chats live here, probably giving some shout outs, right? And then we are taking questions and we make it a fantastic session. So a lot of people will ask, what is futures and what is the difference between futures and spot trading? Okay, we've tackled it before, but then I will still touch base on it. So futures trading can actually be extremely rewarding, but it can also be considered as risky. So a few things that you need to keep in mind to enable you trade futures more effectively and efficiently. You need to understand the basis of futures trading. You need to know how futures contract works, including the margin, leverage, expiration, how to set your stop loss, your take profit, so you are not liquidated quickly. And you need to use a proper trading plan. So it means that you need to have a trading plan for yourself. You set a clear entry and exit strategies for yourself. You define your risk tolerance and stick to it. Use stop loss and take profit orders. You also need to take into consideration practicing proper risk management. Now, risk management itself, I think we will treat risk management as a whole topic. Maybe we'll choose one day just to tackle risk management, trading futures and sports. So you'll be able to understand all the angles risk management covers and how you can actually protect yourself. Okay. So never risk more than 1 to 2% of your own capital on a single trade. It's actually something that we talked about, but not everybody can observe it depending on the equity you are trading with, right? But let's say you are trading something like $1,000, $10,000, you can definitely set some rules regarding the 1%, not to risk more than 1% per trade. We also have beware of margin requirements and potential margin calls. So the rules that govern the margin isolation or cross margin mode is very important for you to understand. And then you also link it to the instrument you are trading. If you are trading BTC USDT, if you are trading BNB USDT, you link it so that you'll be able to know what actually to use them for and the purpose. You need to understand position sizing, right? And then how to manage your risk exposure. So when it comes to position sizing, is you integrating your margin and leverage so that you don't abuse and over expose yourself to too much risk. You need to follow news and trends. So this is very important because a lot of people go into futures trading without looking into what is currently happening. The market we trade is based on demand and supply. Okay. And it's also based on activities happening. We are an industry, a growing industry with a lot of regulations coming up and stuff like that. So whatever assets you trade or you want to trade, you need to look at its fundamental principles. Fundamental principles will actually vary from the purpose of the project, what the project is coming to solve, and the rest. Then, at least at the end of the day, how is the world actually reacting to that particular project, creating demand and supply as well. So you look at economic indicators, you look at geopolitical events, central bank decisions can also impact prices, especially dominant cryptocurrencies like BTC, Ethereum, PNB. Most of these are projects that some of these economic activities or indicators can have some impact upon. So you also try to use the fundamental and technical analysis to guide your trade. So I will tell people that when you want to be a successful trader and you don't put or anything.
Hey, Mark, I think we lost you. Can you hear me, Mark?
Speculating the market. So as we are speculating the market, we also need to have access to information. So that is also very important. You need to follow market news, fundamental data, and trends. So you should understand and try to master technical analysis. Now, it is very important for you to try and understand technical analysis. What is technical analysis? We will delve into it. The ability to identify the nature of the market, that is the nature theory governing that particular asset you are trading. Now, when you are able to understand the nature, you then come to get to the outlook. And from the outlook, you are actually getting your direction and then you are making your trade decision. So in this case, you look at how to read chart patterns. Definitely, we cannot talk about chart patterns without talking about how chart patterns are put together. Are you using the Japanese candlestick approach, or you are using maybe Hekinashi, you're using the line chart, or you're using the bar chart? Now, when we share, when I share my screen, you have access to all those things and what they actually do. So, which of these work best for you? It will actually be based on how you take technical analysis into consideration and how you want to read the chart. You identify ability to identify the patterns, trends, and then useful indicators that can align with your principle of trading. We look at relative strength indexes, the moving average, convergence, divergences, moving averages, and minimum. Now, when you come to indicators, we have perceptions. Everybody have their own opinions, right? So before you put an indicator on your chart, you should try your best to understand what the indicator is, what are the components of those indicators before you put them together. Is it a trend identification indicator? Is it an oscillator indicator? When we go into oscillators, we are actually talking about convergence indicators, divergence indicators as well. The momentum indicators are also there, volume indicators are there. Now, if you understand and know the purpose of those indicators, then it means that you will be able to use them well. Some are lagging indicators, some are leading indicators. So you also need to understand those things as well. You need to pay attention to support or resistance levels and key levels, potential reaction point of price based on previous levels, understanding market movement and where price will stop, brief before continuing, right? So we're going to link all this before we actually go into it. Now, interestingly, you can actually practice an overview on a demo or a mock experience first before you go into real life trading. So you can practice without risking real money, but put your emotion in check so that you'll be able to understand the platform very well before you go into it. And after you gain experience and confidence, then you can start going live. The next key important thing you need to look at is definitely going to be how to be emotionally disciplined. Now, one of the first emotion I'm very sure every trader have is greed. I want to make the money so fast, right? So if you avoid revenge trading or over trading, you are definitely going to fix a lot of emotions. But then before you are able to even identify your emotion, you are actually putting in check a plan. Okay, so draw a realistic plan with an approach with proper risk management. At that point, you can be able to go far in the industry. So when you stick to your plan, regardless of emotion, you're actually on a better way to learn to become a profitable trader. You need to keep learning. It's actually a dynamic industry, right? So it's not about how I know it's like that forever because market conditions are changing, right? That's why you should definitely stick with academy.binance.com to be able to what get more insight, get updated information that will help you. All right, so I'm just going to share my screen. That's just the tips of the iceberg for you to help you grab this concept properly. So I'm going to share my screen and then we go into activity to be interactive, practical as well. So from the chat room, you can drop any asset you want us to analyze together, but I'm not going to give you a trade idea. So we do the analysis, then you develop a trade idea after your confluences are met. Okay, so as a trader, before you are able to have an edge in the market, there should be things that communicate to you that, hey, there is a green light here, or the market is actually ready to speak that your language. Then you can make a decision for yourself. So from YouTube, Facebook, Binance Live, you can give an asset on Binance, futures that you want us to analyze effectively and possibly make a trade decision for yourself. Now, how do you go to futures? This is the web app. You can use the web application. You can also download directly from the website to your computer. So you can have the app on your computer or your PC. Then you can also trade directly on your mobile devices, Apple Store, iOS, Android, Huawei Store, and every other store legally. You can actually see Binance app to download as well. So we have Buy Crypto. So that is if you are joining Binance and maybe you are fresh, you don't have any money deposited in your account, you can buy crypto. So you can also deposit through P2P, which is an escrow-like platform trusted to help you input fiat currency into your Binance app. So we also have the market where you can see all the assets running, the overview, how they are performing, and the rest as well. From that aspect, we go into trade. Under trade, we have the basic trading and advanced, where you can see the spot trading, margin P2P, convert, and where we are coming is futures, right? Where we are coming today is futures. So we have the futures, which is USDS M futures. Then we have the coin M futures. We have also the options. So we are coming to talk about the USDS M futures, which is not too different with coin M futures. The coin M futures are settled in cryptocurrencies, and then the USDSM futures are settled in USDT or USDC. So when you come to futures, we have what we call a pair of assets. So for example, if we're looking at BNB, we are actually seeing BNB against USDT. So what is the difference between the two? The first one, which is the BNB, could be considered as a base pair, and then the second one, which is the USDT, will be called the quote pair. So the quote is actually the quantity you need to get one of the base. So just to interpret it directly, we will say that currently you need 689 moving dollars USDT to get one BNB. That's just the interpretation. Now, when the market is actually going up, it means that the base currency or the base pair or the base quote is actually bullish, is strong. And if the other side is happening, then we'll say that the quote is actually strong. And it's one thing you need to carefully understand. So between 20th May 2025 till today, we will say that BNB has been bullish against USDT, right? So we can also say that between 23rd May to same within 23rd May, BNB actually became weaker against USDT. That is just what you need to understand, right? So we are going to go into all this deeply for you to understand. Now, a couple of days back, we touched base on this. We analyze it publicly. And if you actually show up last week and then you observe the approach we used to analyze BNB, definitely you should have been able to spot the direction of the asset. Okay, indirectly, yes, you could have been able to spot the direction and make some few profit for yourself. So we are still going to delve into it. And just on screen, we look at some of the key important things. Candlestick is very important because it's a language you want to understand. It's one indicator we use as a graphical representative of what price is doing, what other people are thinking, the ones you are not seeing. It helps you interpret price. Okay, it helps you interpret price. So it's very important to know the way you want to view the chart. Now, how do you visit? How do you view the chart? That's a question. So we have the button here, but before we come to this button, you can actually see the futures chart in two ways: the original chart, then the trading view integrated chart. So the original chart also give you ability to analyze. You can add few stuff on it, but the trading view gives you more tools to analyze with. So we are going to break them down so you understand everything properly. Now, we have time frames over here. Before we come to time frames, we also have how to see the chart. So the first thing is the bar chart. So you can see, let me just expand it a little. I will expand the chart when we get to technical analysis. But so this way is the bar chart. We have people that trade with bar chart. Have never traded with it before, but I remember when I started my trading journey, there was a point in time where someone expertise understand bar chart and use it too. So it's a way of viewing the chart. So we have different types or ways to see the chart or price interpretation. Then from there we have candles, which I'm going to talk about as well. From candles, we have different types of candles. We have the holo candles, Heikin Ashi candles. So the holo candles are this way, and then Heikin Ashi is this way. There are some advantages actually using Heikin Ashi or any type of candlesticks to trade. But then the Japanese candlestick give you a couple of breakdowns and rules. So if in case you want to use Heikin Ashi, it means that your research have to go towards what is Heikin Ashi and how it works so that you'll be able to use it properly. Anything you want to use to trade, you want to use to make a financial decision, the first responsibility is try to understand how it works, the rules that governs it. If you know the rules that governs it, it means that you can apply those rules properly, right? So that's for Heikin Ashi. Then we have the line. Yeah, at that point in time, I use line. We have advantages and disadvantages for all. So, for example, if you're using line, you will be able to see price opening and closing, but you not see the high and the low of price. For example, let's say I want to analyze this chart right now, and I'm only using line. My understanding is on the 25th, exactly 8 a.m. GMT, price gets here, okay? But then when we change to candlestick, it will be different. When you get to candlestick, you can realize that what you are not seeing or what the line chart did not present to you is, yes, price got here all right, but according to that 8 a.m. GMT candlestick, market actually gets lower 556 before pushing up. So each or any of the ways you want to see the chart, you also look at the pros and the cons of it before making that decision. So it's very important for you. Now, we then have how do you interpret candlestick, right? We will definitely be looking at how all these interpretations will go and how to read the candlesticks because each candle has an information it is giving you. So it's very important to understand. For example, on a 1 hour time frame, between 13 GMT, 14 GMT, and 15 GMT, we have a very beautiful rejection candlestick here. Now, to interpret this candlestick, there is a name for that candlestick. There is an information that candlestick is communicating to every trader. Now, that information can be false and it can also be true. But then, before that candlestick formed, a lot of people will be seeing around 688 as a resistance. They'll be seeing around 688 as a resistance. And people that don't understand market outlook and structure and nature, they might be selling at that particular resistance. Then all of a sudden, the market will just go up, clear their money, or take them out of the market, or hit their stop losses before pulling back as well. Now, that candlestick, we can call it an inverted hammer. Some people also call it the inverted pin bar. So, depending on how you understand that candlestick, will help you make a good or bad decision. Now, we have different candlesticks that form and how we interpret them. But the first thing you should put in mind is how that candlestick opened and closed. Now, within the frame, like the time space you are watching it or the period you are interpreting it, will communicate what it will be doing at what point. So if you are dealing with a period of 1 hour, it means that price interpretation will be presented to you every 1 hour. And if it is 4 hour, price interpretation will be every 4 hours. So we have how you can put all these candlestick patterns and structures together to help you read the market properly. It's also going to depend on the type of trader you want to be, the kind of trader you are, and then how long you want to hold trade. For example, somebody will see this particular two candlestick here and then observe something and make a beautiful decision here. Now, those who make that beautiful decision, they will definitely be in a bullish move and then they'll be making money. But then some people will also see this and they will sell, expecting market to come here as well. Yeah, they are all part of the game, right? But then that is why when you do the analysis, your responsibility is putting measures to protect yourself, which is stop loss, so that you don't lose more than expected. Now, I will not go deep into candlestick, but then I'll refer you to read on the candlestick on the academy.binance.com website. It's very important because when you understand interpretation of price, or let me put it this way, anything you can interpret properly, you understood it, and then it can work for you. Okay, so candlestick is very important. We have types of candles. It's my favorite. I use it a lot. It helps me understand and communicate with the market. My goal is that I want to understand what the market is doing before I make a decision, right? Now, before you be a trader, you need to know your exit points even before your entry, which means that when we are talking about exit point, it's not all about take profit. There is the what if. So the what if it did not go well sometimes is more important than what if it goes well, because a lot of people focus on let it go well and they feel disappointed. The market does not disappoint. You just see it from the wrong aspect. Very, very important. So now we have communicating candlesticks. We have turning point candlesticks. We have decision making candlesticks. So by names, we have engulfing candlesticks, the Harami candlesticks. We have the piercing lines. Maybe if you are going through and I spot some, I'll definitely point them out for you. We have different types of candlesticks and how they work. Single candlestick decision, double candlestick decisions, triple or three candlestick coming together to give you a decision. We have the tweezers, top and bottom, and where they form, how they form, what they communicate to you, right? Now, when you try to put this together, it could also help you understand structure and how the market is drawing patterns and how you can align those patterns to make decisions. We have complex patterns like evening stars, morning stars. Then all these can come together to give you patterns where you'll be looking into M patterns, W patterns, double top patterns, um, complex patterns like head and shoulder patterns, to the extent where we go into carpet handles. And these are all based on technical analysis point. Now, we have views, we have people have perspectives when it comes to technical analysis, right? And which of the technical analysis methods I like so much? For instance, I go with price action. What price is doing, I conform with price. We also have people that go with other ways. They call strategies. But then, what we practice actually is anything that validates what price is doing. Now, let's say you are somebody trading smart money concept, which is a whole concept on its own, and you are dealing with fair value gap, change of character. They are terminologies that actually play their part. But the most important thing you should take into consideration is, what is price doing? Now, when you now know what price is doing, then you can get a validation methods or approval criteria for that price. That becomes your trading concept or your trading profile. And some people will say that is my trading strategy. If you call it this, so that is fine. Right. Now, however you try to understand that particular concept, just focus on what is my best strategy. My best strategy or concept or profile is what I use my eyes to see what market is doing, not what I chew and pour or what I learned over the years. Why? We are in a dynamic market. It keeps changing. So if you make yourself static and the market changes the dynamics of the game, it means that your strategy or the approach will become invalid at that moment. Do strategies or concepts work? They work, but you might not see it working every single day. And that is the truth. If you follow a strategy, maybe moving average crossover, depending on the time frame you add that moving average, will also determine how many times that strategy will work for you. It's also very important to understand that as well. Now, if you understand that as well, it means that I always tell people I mentor that the best strategy you will need is the discovery you make for yourself. The best strategy that will work for you is that discovery you will make. So it means that no matter what I teach you, for instance, the discovery you will get, whatever you bring out by observation, becomes your best approach to trading. Very, very important as well. So if we get it this far, then we are going to look at command executions, right? Now, how do you make a decision, right? So let's say we are looking at, we've done analysis. We are yet to go into analysis, but let's say we've done analysis. And the analysis is that BNB is actually bullish. And you are a speculator. And you realize that before it goes bullish, whatever it's doing, your analysis is saying that price will bounce back to 680 before going up. So let's say that is what your analysis is saying. Why? Because your analysis also saying that the market has somehow trapped some liquidity above 689. So you are expecting price to bounce back to 680. What type of order will you be doing? So you want to buy, but your expectation is that the market will come to the downside first before moving to the upside. So we are saying that you are not buying from this area. Your expectation is price bounce back to this point first. Okay. So expectation that price will bounce back to this point first, then give you an up movement targeting maybe the next psychological level, which is 710. Okay, for instance. Now, the first question is that what communicates to you that the price could bounce back there? But it already touched there before. For instance, if we take it here, price actually broke a level here that conformed with a previous level that formed 22nd May, right, on the 1 hour time frame. So whenever you want to define your chart, you need to specify the 1 hour time frame. Now, on the 1 hour time frame, that happened and price visited. Why do you think price visited again? You can say, okay, it actually double checked on that level before. That is why I anticipated or speculate that it will bounce back to that point before going to the downside. Now, per my observation, this is what I'm going to tell you. My observation is look at how price break through this level and how price break through to the top. If you can see here, you can see that markets struggle a little bit on consolidation level, and we have an impulsive move to the downside. Now, since we have an impulsive move to the downside, this particular candlestick is now very important to me, which I'm going to talk about. But then the execution style, right? The decision you'll be making when you expect price to push back to 680, it doesn't matter when you think price will get there. But what matters is that your analysis says that price will revisit that place before buying. Then you are going to put a buy limit order. Okay. So you're going to put a buy limit order. So you can come here and then click on limit order, and then you put your price. So for instance, what type of execution am I doing? I want to do a buy limit. Then I'm going to say my expectation that price will come back to 6.680.075 before going to the top. So it means that I'm going to take a price here. So I'm interested buying at this particular price, not the current price. So you also need to know if you are trading or you want to execute trade, the type of executions you will be doing, it also matters. Very, very important for you. Then you can set the quantity, you can set your take profits, your stop loss, then you can execute the trade. Before then, your interest is actually in the type of margin mode you want to use. So spend your time to read on margin so you'll be able to understand what is cross and what is isolated. Now, if you understand what is cross and what is isolated, then you'll be able to know the risk elements you are going to put in place, right? Now, after you decide on the margin mode, you are coming to leverage. So the margin mode will determine your risk factor, and the leverage now determine your risk. How much are you willing to risk? That will determine how much you are willing to make, right? So don't just come and pull the bar to the left-hand side, the right-hand side, and just jump into it. No, you could also read the maximum position also, and then selecting leverages and the negative and the positive effect. Like it's a two-edged sword. If you think your risk appetite is extremely high and you understand all the rules that governs leveraging, and then your risk to reward ratios are also in place, then maybe you can go a little bit higher. But if you are starting, I would definitely say start with a low risk, all right? So that you can stay in the game for a very long time to realize your mistakes, right? When I started trading, I make a lot of mistakes. It wasn't a smooth journey. It was rough. So if you don't control your risk from the beginning, you might even think, oh, this thing cannot, I can't do this. Like, oh, I'm not interested again, and you end up giving up. But then if you stay with a low risk, let's say you're rating 1% and your equity is 1,000 USDT, means that you use $10 per trade, and as your equity is reducing or increasing, you are increasing it as well. You have a very basic principle relating to how you want equity to grow as well. So if you risk $10 per day and then you lose that $10, you still have opportunity to trade the next day. That is also one thing you should consider. All right. Now, let me just see if there is some questions in the chat box. Drop your asset that you want us to analyze quickly. So we do an open analysis as well.
I think we lost you, Mark.
All right, I think I'm back here. So, is there any asset you want us to look at? YouTube, Facebook. If there is none, I will analyze my own asset. But if there is, we will analyze for you. Okay. Now, after you select your leverage, you will now confirm. Okay. So let's assume I'm just going with 4x, then I confirm. So everything is normal. So we now go into proper work for the day. And I hope before the end of the session, after the end of the session, you will get some confluence and execute a trade. Then you come and give me feedback next Tuesday. Said, okay, I took this trade and this is what worked. Now, as a trader, one thing you should take in mind is you should be able to draw a journal. So when you draw a journal, it helps you what. Now, when you know what works and what did not work, you can fix it next. So if you have a plan, after the plan, there should be a journal. Keep record of every trade you took, how you took that trade, what makes you take that trade. Then you are good to go to be able to know what didn't work well. Now, if you keep doing that for a very long time, you will definitely become a better trader along the line. So, okay, since there is no asset in the chat room, I will just randomly pick an asset, and I'm pretty sure that nobody will tell me that I'm biased. All right, so I'm going to analyze BTC first. If there is time, maybe we analyze BNB from scratch to be able to know what the next possible movement of BNB. Okay, then if there is still time, we'll look at other assets. So I'm going with BTC first, and I'm expanding my chart. And then how do you change your assets? So I want to change BTC, USDT, and then I'm selecting this one. Right. Now, if you see, I've already somehow analyzed BTC before. Now, for the sake of education, I'm going to clear everything. I will change the time frame to a bigger time frame, show you how I do my analysis, and then how I consider the step-by-step approach. So normally, the first thing I always want to understand is just a moment, I think. The first thing I always want to understand is on the long term, what is market doing? Okay, on the long term. Now, remember my word. My word says that the first thing I want to do is on the long term, what is market doing? So on the long term, from this data, or according to this data we have, BTC somewhere was 3443 and currently created a high at 112 area. Okay, so on a monthly time frame, this is what I have on BTC. I am a technical analyst. Now I'm looking for what is the next move of BTC. But then, some way, somehow, there is an art. So from 21st, BTC gave me something like this, right? Then come back to this point and give me something like this, and come back to this point, and then push up. What does that mean as a trader? Please refer yourself to Binance Academy and read on patterns, trading by patterns. So when we look at patterns, which is very important because sometimes the market move according to patterns. The patterns give you some basic information to know exactly what price is doing. Now, a lot of people will interpret this market in a different way. And I think at the end of the day, everybody will be correct. What will make the difference is, did it give you profit or it give you loss? Okay. Now, there's also that perception that BTC is going to climb to 150 and the rest and the stuff. But then, technically, is it true? Fundamentally, is it true? The point is that at the end of the day, one day to come, BTC will get to any of the prices mentioned. But how soon? So now, when we look at it, this actually is called cup and handle on a monthly time frame with a very beautiful reaction and price push to the top. Okay. Now, from here, we go into weekly time frame. So if you are analyzing, depending on the time frame, or before you consider your time frame, you are considering your equity and the type of trader you are. Are you a scalper? Are you going short time frame? You get small profit, you come out. Are you a day trader or intraday trader? Or are you swinging the market? Are you buying the asset, the crypto, holding it for a couple of days, weeks, or months? Are you a position trader, which is a long-term trader? You want to hold it for months, weeks, and years. Those are things that will let you know how you should look at the asset. Now, from monthly, you go into weekly so that you understand how price reacts or interpreted into week. For instance, 1 month has 4 weeks. So within that 4 weeks, is it a bullish market or a bearish market, considering candlestick structure? All right. So we come to weekly. So it's a step-by-step approach. So weekly, you will now see some data and then interpretations. Now, when you come to weekly, since we are looking at current data right now, we have some important areas we are going to spot, which I will consider as my levels. So on the support level, I have this particular level as a basic zone that BTC reacted to. And then we have some previous resistances that were broken. So they were broken and converted back to another zone. Now, one thing you should understand is that if you are dealing with some assets like BTC, BTC is more or less like a high volume, most traded crypto asset. But you need to check what makes it move within a certain time. And then consider how the candlesticks are moving. Is it in a trending market or consolidated market? It's also very important for you to understand. If it's in a consolidated market, then is it necessary for you to trade? Now, when you go into a really structured trading, you hear so many times that trade a trending market, not a choky or a choppy or consolidated market, because it helps you understand what market is doing. Now, when we now zoom out a little, focusing on this very data, from this particular point, somewhere 2024, BTC moved, giving us something like a bullish engulfing candlestick, and all these areas were considered as resistance then. Okay, all these areas were considered as resistance then. Now, these areas being considered as resistance, somewhere November 4th, we saw a very bullish candlestick, which this particular candlestick is a complete Marubozu candlestick pattern. You can go read about what is Marubozu candlestick pattern on Google. You will get an answer for yourself. Now, that particular candlestick is very important. So when you consider the candlesticks, for me, how I analyze it, this particular candlestick now become my golden candlestick. Why? Based on my experience and how I understand market and trading, this candlestick that happened weekly on the 4th of November 2024 is the most important candlestick I will use to determine the next movement of price. So if I am analyzing, I consider this candlestick as the next decision candlestick for me. So what you normally will see me do is that I'm going to highlight the body of that candlestick. Then I will divide it into 2, then into 4, depending on what I want to do. Okay, so at that moment, I can say I'm done with the previous resistance or previous support market has created, and I'm coming to focus on that particular candlestick. So if I observe that candlestick and that candlestick closed bullish, I can actually go for a buy. And you can see that after that candlestick, we have 2 bullish strong movement before price consolidated a little, trapped liquidity, and dropped back to almost 50% of that previous candlestick. And if I get my confluences right, I'll be waiting patiently for another execution. Now, BTC will move definitely with demand or supply. If there's higher demand, you see more of green candlestick with full body, or you see more of bullish candlesticks, momentum candlestick with big bodies, almost no wick or no rejection. So those are some of the things you need to see. Now with this, it's very, very simple that I should be expecting a potential reversal at this particular point, either on a retracement basis or on a continuation basis. Now, assuming BTC to break this particular level, I will patiently expect it to close below the opening price of that particular body. Then, in that case, I'm expecting to push back to this particular zone. But as far as it closes above, I will wait for confirmation. So the confirmation I have is this small bullish candlestick that happened here. Then it means that 25th April, you are going for a bullish move and you are actually enjoying good money for yourself. What about the top? That's the question somebody asked. Somebody is wondering if you want to press the sell button or the buy button. Now, if I'm considering this move now, previous level on weekly time frame is here. So there was a zone currently on the previous level. Then we extend that zone to the left. Now, technically, right? Technically, price somehow is trying to break this zone, which is a high BTC created. The highest price BTC created was January 20th, 2025. So market break it, all right. But according to the weekly time frame, it couldn't close above it. So what I observe patiently is a close above. So normally I will divide this zone into two again, and I hope I'm not giving a financial advice, and I don't give a financial advice. Before you actually make any financial decision, kindly do your due diligence, your own research before. Now, if price break that level and bounce back at the center of the zone it created, which is breaking, I will be waiting for market should be reacting above that zone. If market is reacting above that zone, then I'm expecting a candlestick to close above the high of that previous zone, which will be somewhere around 111,000 if BTC closes above it. Now, this is the point where you start getting confluences and then building up yourself to understand what communication market communicates to you. So before then, we see that the momentum somehow pause. The momentum somehow pause, and then market is giving us weeks. So what many new retail traders does is that they start jumping into selling. Even if you jump into selling, you need to wait for liquidity to be trapped first. Now, if you look at the movement that happened between 13th January, 20th January, and 27th, we've seen that a lot of people will be seeing 108 as a resistance. They are actually right, but the market have to trap some liquidities, right? Now, if we are going into advance, we'll be looking into how to deal with liquidity traps. I also have an approach that I use that when market hits my stop loss, I know it hit my stop loss, not that it hunts my stop loss. So seeing this, I will be looking patiently for a center of these two levels I spotted as a base point. Then go back to 1 day time frame. Okay. So on a 1 day time frame, let's see what market is presenting to us. So on a 1 day time frame, 22nd May give us a bullish candlestick and close above the zone. But quickly we saw a bearish push to the downside. We did not close below the center of the zone we spotted. Now, it didn't close. So we now have to focus on a short term. We are going to focus on these two levels. From here to here is now very important to us. Whatever decision price make here will tell us what the market will be doing. Not forgetting that we need a good impulsive movement, right? So let's say, for example, I want to make a decision. I want to make a price decision, leveraging on what I just said. I might be expecting that BTC pump to 115,887, 115,857, and breathe back either to 110 or breathe to inside this zone, possibly trap liquidity, maybe giving me a hammer candlestick with a pin, maybe a spinning top, or normally you might not really see morning stars forming on BTC normally, depending on the time frame, and maybe it gives me a proper rejection candlestick. Then it means that I can be looking for the next bullish move on that particular asset if it gives those conditions. So this is the point where now that we get the structure, we will be now getting what rules are governing that structure that will influence my decision to buy or sell. Now, if I am going to sell, then what am I to expect? If I'm going to sell, it means that price have to break below either 107, break below 104, bounce back again into it by giving me some candlesticks like it give here, maybe a mini evening star, which is a fall with a clear confirmation. Then I'm expecting a short. So this means that my buyers will be making a decision from this point or getting a confirmation to the downside. When it starts dropping, for example, I'm pretty sure not everybody wants BTC to drop right now. Okay, but let's say it starts dropping. What levels am I going to be expecting it at? Okay, so the first point will definitely be this area. Okay, the first point will definitely be this area based on how I trade. The second level will be this area as well, also based on how I trade. Then in case it prove a little bit stubborn, then I'll be somewhere this level, which has some inner structures that need to be covered. If it prove a little bit stubborn, then it's this particular level. Now, when you spot those levels, your responsibility is to try and find out how important those areas are. How many investors are willing to make a transaction or a decision over there. Now, if I'm expecting this whole area here, it means that it could also trap liquidity down to this particular level, which is a little bit above 100,000. It could trap liquidity, bounce back here, and continue it bullish. So as a technical trader, your responsibility is to look at all the aspects, all the potential levels, and get your A set up. Once you get your A set up, the market will actually speak your language. And that is just it. You also look at how the candlesticks move per or according to the direction. So if it's moving on the upward, definitely you'll be seeing more of long buy candlestick, more or long buy candlesticks, a little bit of small or maybe a minimal movement or sell. That will also tell you that the market is currently bullish. So based on what we are seeing from 9th April 25, more of red green candlestick with long bodies, green candlestick with long bodies. These are what we've been seeing so far. Now, if this red candlestick that dropped here were to, let's say, drop a little bit below 105 before the buys are becoming smaller like this, we could technically say that the market is changing direction. So candlesticks are very important, but also learn how to spot support, resistance, mini support resistance levels. But then when it comes to BTC, support resistance levels might disappoint you. So you look for the zones. Now, when you spot zones, which is a cluster of area where price somehow make consolidation or react many times at, then you can now confirm how price will react to that zone, making it a demand or supply. Okay. Some other tools you can use to enhance yourself will definitely be patterns. Where you look into reversal patterns, continuation patterns. Some continuation patterns might look like reversal patterns. So try to dissect them properly to understand if the pattern is communicating the right information to you. After that, my best friend, favorite friend, top of all for me, once I'm confused in the market, I look out for is Fibonacci retracement tool. It helps me a lot. So you can then go back to academy.binance.com, read around Fibonacci retracement tool. Try to look at the concept behind it and see if it makes sense to you. If it makes sense to you, we have it complex part, which is the harmonic patterns where you could look into it and you are good to go. We also have people that use what we call the Elliott wave theories. They also use it to make trading decisions as well. So you could also consider, maybe you have a little bit of time, you want to double your skills and grab this whole technical analysis thing as well. It's also very important to read around it. Now, observation is my best friend and it's what I use mostly, right? So observation is my best friend and it's what I use mostly. So now, if you are using observation. You just have to look at what step mechanism is the market moving. Is BTC giving you one bullish long candlestick and then consolidate for a couple of days and give you another one bullish move candlestick, consolidate a little? If that is what is giving you, that is the pattern at that particular moment. So we have the structure patterns and we also have the market or price patterns. So how price is moving will definitely tell you what to do with the market. So on this note, I think we have go in a little. I'm pretty sure it's quite technical to some people, but then you can replay, right? You can replay so you can understand. On the communities, your questions are welcome. So if you're not on the communities, any of the communities, East Africa, Southern Africa, West Africa, just jump on them and ask questions related to things you don't understand. We will humbly give you a response and we see you becoming a responsible trader. That is why we are here, helping you understand the concept of the market and the best approach to use. So on this note, we didn't see any question in the chat room. So on this note, I hand over to Mr. Charles. And then I hope you had a great time with me here. Thank you so much.
Okay, thank you, Mark. That has been an awesome session, so informative. Yeah, guys, as you always say, yeah, you need to practice what we teach, right? So head over to Binance. Yeah, go play with the futures section of Binance, and yeah, let us know your feedback, and make sure you are part, or rather you join our community. So with that, I think I will close the session, and yeah, let's meet tomorrow for another session. Yeah, just to learn and recap on everything Binance. So do have a lovely evening, and yeah, make sure you put whatever we teach into practice. So bye, and take care.